This evening, we're talking about you're only paying taxes because you want to. And I've got to give you the disclaimer. This presentation is for educational purposes only and is not tax or legal advice. Consult your CPA or attorney before implementing any strategy, okay? What am I not? A CPA or an attorney. What am I? A real estate cowboy. I've kind of had some scars. I've been an entrepreneur for almost 20 years at this point. Had some really high highs, really low lows, and I've seen and done a lot. And so what we're about to share with you, I didn't learn in one day, and a lot of it I learned from people that were further along than me, right? So some of it was clients, some of it was mentors, usually older, usually wealthier than me. And so this is a staged thing that we do. So you switch us to the next slide. So like I said, guys, none of these strategies matter if you're not making money, okay? So a lot of people want to skip to things like they think they need a trust or they think they need to do cost segregation studies, and I'm like, what exactly are we protecting? So step one, we've got to make it, okay? So this is what I coach: make it, keep it, invest it. That's how I teach money. And then most people want to skip to their tax hacks. They want to optimize income that they're not reliably earning and protect money they haven't made. So tonight, I'm going to teach you about pacing yourself. And we're going to start at the beginner level. So I'm going to take you through beginner, intermediate, advanced, and then legacy things. And in between, Akila's going to come up and give you some details on her favorite tax strategy from each. So I want you guys taking notes because we're going to open it up for Q&A. So if there's if you go back, if there's anything that you see at the beginner level, write it down. So beginner level is all about learning to make money and protect yourself, right? So setting up insurance, right? And who are my entrepreneurs? We're flying blind, right? We've got to set up our own insurance, right? So I personally have, I'll just tell you my insurance structure, right? I have short-term disability insurance. I have long-term disability insurance. If you don't have long-term disability insurance, given your age, that is the highest risk for us as entrepreneurs. I also have life insurance, right? Then health insurance, and then insurance for properties. But as far as protecting yourself, long and short-term disability, life insurance is important, health insurance, okay? So spend your money on those things first, basically. So beginner level is about learning to make the money. And the risk here, so there's risks and goals with each level. And so the risk with the beginners is you're leaking money, you're confused, you're burnt out, there's just false confidence, and we need to get you to a point of clarity and safety. Because before you ever feel financially free, you've got to be financially safe. Why is that doing that? I can hear him like a dog. I'm like, why is that dog whistling at me? So you have to feel financially safe.
Could it be the interference for your mic? Keep it. Try now.
No, I don't think it's any of that. Okay, so you've got to feel financially safe first. So that is what this piece is all about. So like I said, write down any of those bullets that you want to talk about. Q&A. Akila's going to pick one from each. So you're up for beginner level. You switch it.
Hello everyone, I'm Akila. I am an enrolled agent and I'm the owner of A-List Tax Services. I am one of... So first things first, every single tax strategy starts with proper documentation. If you don't have clean books, you can't implement any tax strategy. So here are your options. You can DIY your bookkeeping. If you do it yourself, you could get away with it maybe for a little while, as long as you're consistent and your books are very simple. I would say the second level would be hiring a bookkeeper and enrolled agent duo. Now you'll start getting some tax strategy, you'll be compliant. And the advanced level would be hiring a CPA. You should start considering hiring a CPA when you need more CFO-like services. So things like audited financial statements for certain types of lenders, shareholders, when you're developing your exit strategy, if you want to sell your business, if you're thinking of legacy planning. The IRS doesn't audit deductions, they audit documentation. So this is the baseline. If you don't have clean books, then tax strategy stops right here.
Say it louder. We don't pass go without clean books. So who from this I like everybody's takeaway. So who needs to hire a bookkeeper and get their books cleaned up so we can get loans and do all that?
Say everyone's hand should be raised.
Oh, Anthony would like me to say everyone's hand should be raised. Where are my real estate entrepreneurs? Put both of your hands, especially if you are salespeople, both of your hands in the air. So any questions about bookkeeper, hiring a bookkeeper? Pretty clear? Pretty straightforward? Go for it.
Is DIY QuickBooks, is that what you would consider?
QuickBooks.
QuickBooks, yeah.
Yeah, QuickBooks, Google Sheet, whatever you're using there.
Some credit cards, a lot of credit cards have a feature in it where it'll categorize your expenses for you if it's a business credit card. It doesn't do a great job, but it's a start. It's good enough. If you feel like you can't afford a bookkeeper, it's really not that expensive, maybe about $200 a month. You can expect to pay a bookkeeper.
That's okay, like that. So $200 a month. I get asked that all the time. Like, how much is it gonna cost to hire a bookkeeper?
Yeah, that's a reasonable fee if you don't commingle. If you commingle, it's gonna be a lot more.
Do you guys know commingle? That just means using personal and business money. So who's W-2? Anybody W-2? All right. Who has a LLC or a business? Okay. I think we'll hit on that too. Getting some of you W-2 guys to set up an LLC. I think that's more intermediate. So we'll get there in a sec. Yep.
Is bookkeeping a service that you provide?
Do you provide bookkeeping?
Yes, so I do have a bookkeeper on my team. Well, he's an accountant. I do have an accountant on my team, and we do offer a bookkeeping service, yes.
Yep. And we've got her QR code and stuff at the end. So yes. All right. Ready? Group. Okay, now let's get into some intermediate and advanced. So when people typically start asking me about taxes and keeping more money they make, these are the things they ask, okay? And something I want to point out though, we've got a little surprise for everybody at the end, because some of this stuff, as I start getting into the advanced and legacy strategies, you have to realize it's not normal, right? Doing a cost segregation study is not a normal person thing to do. And so you have to have a belief in yourself, in the people that have come before you. Because like I said, I didn't learn all this stuff. I didn't just read it. People taught it to me, right? Mentors, clients, vendors that I've met along the way, they all taught it to me. And I put the pieces together, right? Because this is very much individualized. But belief is a big thing, guys. So even in coaching, it's like to believe that somebody can sell over 10 million of real estate, that's the first step. And then it is to believe that you can depreciate your federal income taxes to zero if you want. It starts with believing it's possible, okay? So you really, we actually have a surprise for you at the end to just show you how powerful belief in people and networking and showing up to stuff like this is. So when I say you can pay zero federal income taxes, to me that's as easy as breathing, okay? And it is a choice, but it is not normal, right? So you just have to realize that. So when you start raising your hand and saying, I want to out-earn the normal person and I don't want to pay taxes, guess what 95 to 99% of the population is going to do to you? You're insane. You're wrong. You're committing a crime. You can't do that. But what do I hear when people do that? It's just, I hear that they can't do that and they're just projecting all of it onto me. So belief, guys, that's going to be a powerful thing as you scale income and work on this make it, keep it, invest it strategy. And even, I think, Anthony, we're not going to touch on this too much, but the buy one rental a year thing. So when I first started talking about that in coaching, I think we had maybe 6 people that owned rentals. And then in the span, and that was Angie, that was like the span of a year, we ended up with like 67 rentals just by talking and believing and sharing strategies, okay? So we good? Everybody, belief? All right. So, Intermediate is about fortifying the fortress. And so the risks here, you start overpaying taxes, you're understructured, you've got decision fatigue because you don't know what to do, and we need to work on optimization, predictability, and planning. So my kind of rule of thumb is once you're earning 75,000 or more, that's kind of the green light that we're ready to get into some intermediate strategies, because now we're like, all right, we're making money, we're working there. So you're gonna wanna create an entity, material participation. Angie, excellent at that. Guys, if you have high W-2, you can't do a cost segregation study like the real estate agents do. You're gonna have to do short-term rentals, okay, instead of long-term rentals. That's getting a little nuanced, but Angie is a superstar. I think you helped your one client from, I don't know if my tail will let me get all the way.
Well, I had a client buy a $1.6 million house for material participation. Her taxes were really high in California. I think it was like 40% taxes. So she did that plus a cost segregation study.
Yep.
I think she told me she was saving over 300 and something thousand that year.
Yeah, so Angie, do you think, so what's the commission on a $1.6 million property?
I made 47,000.
Okay, so Angie made $47,000. Do you think that lady was over the moon to pay her $47,000 to save her 300?
Yes.
Yes. Okay, powerful stuff. Okay, so we're gonna talk about buy versus lease. Anyway, write this stuff down, guys. So if there's anything on there we want to Q&A about. And then advanced is about building the legacy vault. So we're gonna have risks here. We're gonna have complexity without coherence and strategy drift. So now you've moved from making money to now you're on everybody's radar. People know you have money, okay? So what's gonna happen? They're gonna start coming out of the woodwork telling you that you need to set up trust, and then they're gonna get into this like, should you do an irrevocable trust or revocable? And they're just gonna be all over you. So the complexity without knowing what you're doing is the biggest risk at that point. So do I have any entrepreneurs that have hit like 200 plus? Okay, you're gonna be making money, and typically at that point, people are so busy with what they've got going on, there's no time to sit and strategize and be calm. So that to me is the biggest risk at the advanced stage, is that you are so busy making money and in the business that you don't have time. And so for you guys, I would highly suggest you create money meetings for yourself once a week, like a short one, 30 minutes, and then monthly do them longer to actually set it aside. A money meeting? It's reviewing all your strategies. Like, why are you doing things? So this is the one thing, like when I meet with people, they tell me, it's like, oh, so-and-so said I should have universal life insurance and I can borrow against it and be my own bank. And I'm like, explain that to me. And so it's like, if you can't explain it, like you are.
Hey, just for the people in the back making a lot of noise right now, if you want to have a conversation, you go outside, just because Marissa's given a lot of great information right now. You'll freeze your ass off and then come back in here and try to be quiet so we can listen. And then we'll get right back to networking after. Thank you so much.
Thanks, Dad.
Thank you.
Guys, be quiet, I'm talking. Okay, so what are we gonna do here? Cost segregation studies. Angie just shared one about 47K, saving, she made 47, saved somebody 100. The Augusta rule. You guys know you can rent your house to yourself for 2 weeks and pay it and it's tax-free. That's a real easy one that everyone should be doing. Hire your kids. You guys know you can hire your kids, okay? We'll do that one. Multi-entity structuring, that gets into protection, right? So you wanna have like umbrella LLCs owning your other companies. And then GP-LP structures, capital raising, QSBS. So who are my entrepreneurs? Do you guys know about this one? $10 million loophole. Anybody doing that one? I haven't done that one yet. That one's on my list. That's on my shiny objects board. Do a QSBS. So it's basically, you can structure an entity and the first 10 million is tax-free when you exit or sell. But you have to set it up from day one. All right, then we got estate planning and 1031 exchanges. So look at this, write it down. We're gonna answer your questions and Akila's gonna pull out her favorite two from intermediate and advanced for you.
Okay, so I would say at the intermediate level, your business structure is very important. once you get to the point where your income is growing, structure is more important than deductions. Sole proprietors, LLCs, S corps, all have different tax treatments. Partnerships bring in another level of complexity. Each entity choice, your entity structure doesn't determine how much you'll make, it determines how much you'll keep. Your structure determines how much of your income and what income, well, what types of income you pay different income taxes on. The wrong structure doesn't normally result in you paying like a bunch of penalties, but you typically overpay in taxes over a long period of time, over years. So for instance, your structure impacts how much self-employment tax you pay. It impacts your exposure to being audited by the IRS. It also impacts planning opportunities. Things like what options you have for retirement planning, exit strategies for your business, things like that. So picking the right entity structure is critical once you get to the intermediate level of your business.
We got a
We got a
question.
question. Ed?
Who's the best person by title to help you understand this point? Is it a CPA or is it a different descriptor we should be looking for on this exact?
Do business attorney,
I didn't.
business attorney and tax advisor together.
You want to repeat the question?
Okay, so the question is, what type of tax professional should you turn to for this level of advice? I honestly think it's based on what level you are as a real estate professional. If you're at the beginner level, then an enrolled agent can give you enough advice for your structuring. Once you start becoming intermediate and advanced, you should start coordinating with a business attorney and a CPA. They'll help you structure it and determine, based on your income, your business activity, how much activity you do, how much time you spend in the business, and your goals, what's the best structure for you. You're welcome.
Good question. Did that answer your question, Ed?
What's the difference between LLC and S corp?
Okay, so an LLC is a limited liability company for tax purposes. So I'm an enrolled agent, I specialize in taxes. So for tax purposes, the LLC and the sole proprietor are pretty much taxed the same way, but there are legal protections with an LLC that you don't get as a sole proprietor. An S corp is a tax election. It's not a type of business, it's not a business structure, it's a tax form. So the S corp is a tax strategy. That makes it so that you only pay self-employment tax, which is Social Security and Medicare tax, on your wages. It basically lets the government know that that your business has grown to the point where it should be recognized as its own standing entity, as its own business, and you are separate from your business. You are paying yourself as an employee, you're on a salary, these are your wages, this is what you should be paying income tax on, everything else is the business's income. The business doesn't have to pay self-employment tax, Social Security and Medicare. Only people do, not businesses. Any other questions?
Don't we love her?
Jen?
Is it the same protection filing as an S corp as you do as an LLC? So are your personal assets protected filing as an S corp?
Okay, so I'm not an attorney, but no, you don't.
Wait, what was the question?
Okay, so the question was, do you get the same protections if you're an LLC versus a sole proprietor? So no, you don't. Yes.
So I have CPA, and like I'm not super happy with my CPA. I feel like a lot of these types of points I have to bring up with him proactively. He's not going to be with it. So do you find that certain CPAs or tax professionals are more used to dealing with real estate investors than others?
Oh, this is a hill I want to die on.
There is a such thing as specialty in the tax industry, and there's a few industries that have very specific cheat codes in the tax law, and real estate is one of them. So as a real estate professional, I do highly recommend that you work with a tax professional who specializes in real estate. Farmers should work with someone who specializes in farming. Fishermen, there's certain industries, oil and gas industry, real estate is one of them. It's not, but it's not too far-fetched to have to bring up some strategies that you've heard of to your tax professional, because the Internal Revenue Code is 4,000 pages. No tax expert knows everything, but when you bring up certain things, they should be able to tell you if you should implement it, if not, why not, and when you should start considering it. Any other questions about the structures? Okay.
Am I moving on to the advanced one, cost segregation, or what's the next step?
Yeah, can I say something though about that thing? So, I'm gonna take like a little pause. I want to say something about who's ever talked to their CPA about one of these strategies and got shut down. Okay, super frustrating. Me too. What did I do? You get switched, right? Okay, and then over the years, I learned, okay, CPAs, you know, it's not a one hat, like Akila was saying. So it's like, yes, there are real estate CPAs, but then there are even niches within the real estate CPA. So I have 4 right now that I work with based on whether it's personal, business, whether it's a part of a partnership or whatever it is, because they don't all do these things. And I remember like Angie, like when we were doing the buy one rental and like doing the cost segregation studies, most of the real estate agents, their CPAs are like, what the hell is a cost segregation study? They didn't even know. And so that's a problem. Your CPA doesn't do it. You can hire companies like US Tax Advisors, and Keela's got some recommendations for that as well. But you really have to be careful about who your professionals are. So now any person that I talk to, I ask them, how many rental properties do you own? It's literally like, hi, Marissa, nice to meet you. Yeah, the ice is cold. How many rental properties do you own? Are you an entrepreneur? How many exits have you done? Okay, because they will shut your dreams down and don't even mean to when you're like going through these strategies. So if you've ever been shut down, just shake it off and go find somebody new. Because again, that goes back to the belief thing, and you are raising your hand saying, I want to do something out of the ordinary. And guess what? Ordinary people do ordinary things. So you have to look for others. Okay, I would like to die on that hill.
Yes.
Fine. Back to you. You want to do cost segregation? Advance? Yeah.
Okay, so I'm going to move on to the my advanced recommendation. Well, one of my favorite strategies for an advanced real estate professional. I agree with Marissa. The cost segregation study can be very powerful if done correctly. It is important that it's done correctly, but basically what it does is it accelerates depreciation. So normally assets, you deduct them on your tax return over the life of the asset, not in the first year that you buy it. And a cost segregation study basically breaks the property into components so you can depreciate it faster and take a larger write-off. So for example, let's say you buy a house, a rental property, and the study will take out the components of the house, so the doors, the windows, the flooring, the siding. Instead of expensing the house over 27 or 39 years and having a $4,000 write-off, you can expense this category over 7 years, this category over 5 years. So now instead of $4,000, you got a $15,000 write-off or a $20,000 write-off. That's how the study works. That's what it does. But it is a planning tool. It's not something that you should just automatically do because you bought a property. It should be timed, so it should be done in high-income years, and it should be done for specific or certain types of properties. Yeah. Okay. So what questions? Yeah, anyone have any questions?
Yeah, Kevin.
Kevin.
What type of properties? How best suited?
So it depends on
Keelan,
everyone's
can you repeat the
specific.
question?
Okay, so his question is, what types of properties is a cost segregation study most suitable for? They're expensive, number one. So I usually don't recommend them until you have somewhat of a portfolio. They cost, I've never seen one cost less than $1,500, and that's on a small,
We're just losing the back of the room.
single family property. So they typically cost about $3,000, maybe sometimes $5,000, maybe $7,000, depending on the property. A lot of the engineers that I work with don't even want to do them unless there's at least 7 units because they're so expensive. And it depends on your level of participation. So it really makes a lot of sense for real estate agents who also are investors who work full-time, because you can take the full expense against all your income, not just your passive income. But if you're just an investor, then you can only take it against your passive income, so you won't be able to take it against your earned income. Yes?
You mentioned that cost segregation studies have to be timed or it must be timed. What do you mean on that? Can you elaborate more?
Yeah, so that you should do them in high-income years. I know it's hard to determine like if you're going to have a high-income year, but you should be, if you're tax strategizing versus tax prep, is 2 different things. So tax preparation is done when the year is over. Tax strategy is done throughout the year. So if you're working with a real estate professional, they should be telling you certain thresholds or certain income levels when you should be reconvening, or maybe you have a meeting, a scheduled quarterly meeting. Your professional should tell you when you've gotten to that point. When your income has gotten to the point where your taxes are about to be crazy and you need some more strategy. So that's what I mean by high income years. So you might see one quarter that you made more money than you normally do. You need some type of strategy.
Can you do like a cost segregation on a flip that you haven't sold?
Just for rentals.
So really you shouldn't, it's no point in doing it on a flip. Really you would do them on properties that you hold, not properties that you flip. Yes.
This might be maybe too complicated of a question, but I'll still throw it out there. So do cost segregation studies have any negative impact, like I guess the con to it? Like you've talked about the pros, is there any con to it?
Yes.
Like I think I've read somewhere like if you do eventually sell the property, then
Yes, that's the
you,
con.
okay.
Yes. So there is a con to it. So if you don't time it right or pick the right years, depreciation, when you sell the asset, you have to pay capital gains tax. So you have to pay tax on your gain, on the money that you made on your assets. Same thing with stocks, same thing when you sell your house that you live in. So the depreciation has to be added back in. So you could end up, if you don't do it right, if it's not strategic enough, you could end up paying capital gains tax and defeating the whole point of doing it. And then if you add in the cost of the study, you could end up it not working out.
But then
That's
use
why
use
advanced
1031.
strategies should never be a DIY project. It should always
Say that again.
be-
Say that again. Advanced strategies. What?
Advanced strategies should never be a DIY project. So you shouldn't just go get a trust because you think you should go get a trust. You shouldn't just do a cost segregation study because you think you should. You should do it because it was a recommendation of the professional that you're working with, or even if you brought it up to the professional and they agreed that now is a good time. Yes.
So with CPAs and tax professionals in general, I find just like anything else with trades and whatever, that can be a large price difference. And my CPA can tell me my preparation fees for $1,500 or $5,000. I would just have to leave them, I feel like. So like, can you explain a little bit about how what to expect so far as that, like how
I like those guys'
your
questions.
fees kind of get charged and accumulated, just so we can understand a little better.
Yeah. Every professional sets their own fee. So there's no industry standard, very different than real estate. We know that we're not supposed to say that, but we know what we do. Very different than the real estate industry. Every professional sets their own fees. The average for an individual return in the industry is about $500, and the average for a business return in the industry is about $1,500. So if your professional is charging somewhere around there, those are fair fees.
And then, sorry, that's a follow-up question. So like, but this proactive stuff you're talking about throughout the year, quarterly meetings and stuff like that, like, is that something you should be expected to be billed, more for, like almost like an attorney, like where
Yes.
you're being billed hourly? Like I really don't know.
Yes. Yeah, so most professionals have a flat fee for tax preparation, and then their representative services, like if you need them to represent you before the government, and their research, yeah, they usually charge hourly throughout the rest of the year.
Okay, cool.
Good question.
Okay, what other questions? Yes.
So you mentioned that the cost of cost segregation is almost not worth it unless there's like multiple properties. So is like a 7-unit portfolio the same cost as like a single unit cost segregation, or is there different value there?
There's different prices. The more units, usually the higher the
So it's
price.
per unit.
More so per square footage.
And would you say there's a certain, like, you mentioned before, the values, like $100,000 property versus the $300,000 property? Obviously, more of a write-off of the $300,000, but is it still worth it to do the $100,000? Does that obviously depend on, I guess, your income for the year?
Yeah, it does. It depends on your overall situation. It depends on what structure you're operating under. It depends on your income for the year. Yeah, because my mind goes all over the place when you ask that question.
Because you could have like a 5,000 square foot, $100,000 property versus a 1,000 square foot, $300,000 property.
Can I make a recommendation just real quick? So the company that I use, guys, is called US Tax Advisors. Because I don't know if you can see, there's like a little green, it's far away, but there's a button when you go there, and it literally says schedule a free consultation, right? So I would do that. And then just have them look like, Anna, you could maybe do look back studies on some of your rentals to offset some of the restaurant income. But again, the advanced strategies are not a DIY project. So that's like, this company is great. They'll even show you a breakdown of like the difference between doing the regular 27.5-year depreciation on residential or 39 for commercial versus what you can do with the segregation study. They'll give you the price. These guys, honestly, they have the best pricing that I found, so that's why I like to recommend them too, because it's advantageous when you're dealing with like residential lower price point properties. So I would
Say the
just
name one more time.
it's called US Tax Advisors Group, and it's got that little green. What is it?
Is it a paper airplane?
No. Definitely not, but it's a star. But if you guys come up after, I'll show you if you can't find it.
Any other questions?
Let me switch to legacy. All right, we're getting to legacy time. So I want to I want to simplify things because I can see sometimes we start losing rooms when we get into some of this stuff. So I want you to write down 3 things for the federal government, what they love to give you credits for. Okay, number 1, owning real estate. Number 2, business ownership. Who knows what number 3 is?
Marriage.
What?
Kids.
Kids. Oh, yeah. Oil and gas, guys. Come on. I'm like, meh. No, come on. We're a capitalist America. Okay. Real estate, business ownership, oil and gas. So write those 3 things down. Business ownership. So when you're thinking, I want better tax treatment, I want to make more money, keep more money, 3 things need to pop into your head. Owning real estate, owning a business, and oil and gas. Okay? Oil and gas, I'm not going to get off on a tangent on that, but there's plenty of boys in Texas that run funds, and they have royalty funds where you can get a 15% deduction from some of that. You do direct oil. I decided that I need to invest money into direct oil and gas, like drilling wells, and I lost the entire investment, but I didn't because there's something called intangible drilling costs, so you can take that. Anyway, there's so much you can do. But then I was like, hey, dummy, go back to what you know, real estate and business ownership. So lesson learned. I got punched in the face on that one. So, and you're going to get punched in the face. Shall mention that? Who's an entrepreneur? You're going to go up and down. It's not, what you got?
Hey, quick question. Oil and gas.
Yep.
Like for us, environmental friendly, get into that. Does like natural energy or like solar, can that be like replaceable to?
I actually don't know. Does anybody know that one?
No.
You know,
No, no,
it cannot.
Not even solar?
Solar, so you're talking solar, wind energy, like, there might, I know there's credits for it, but as far as like deductions to get your, I don't know, we'd have to, that's a good one.
Just to say something, I met with a green builder this morning in Asheville, North Carolina, talking about solar, and credits are largely going away.
So solar credits are going away, okay? Back to good old America, guys. Drill, drill, baby, drill. We don't want any of your California nonsense. But I'm from California. And I remember I moved, just a little story, I moved to Charlotte in, when was that, like 08, 09? And I think it was like they were just getting like natural gas buses maybe like 3 years after I moved here, and they were so proud of that. And I'm like, what in the and like the smoking indoors was still a thing. Anyway, okay, I absolutely digress. Let's get back to what we were talking about. So 3 things, guys. If you're a W-2 person, guys, I hate to break it to you, and you probably already know this and feel it, you are the ones paying the most taxes.
Yes.
Hey.
100%.
So we got to think about Caroline, what are those 3 things? When we're thinking about we want to keep more money and make more money, what are we thinking of?
Real estate, business.
Oh, real estate.
Come on, Ed.
Real estate, business, oil and gas.
Yeah, okay, cool. So that's just,
Marissa, real quick.
yeah.
When do you know you're in this phase versus the advanced strategies? Like, what's a good key, or what are a couple of key metrics?
Okay.
Or what's a good key?
All right. So my background, was a hedge fund analyst in Santa Barbara before I moved here, and my mentor that I interned for in college and went to work for his fund, he's a Jewish guy. And in Judaism, it's a very beautiful religion if you guys have ever participated in any of the traditions. But one of their things is the way that they approach wealth is very different culturally than anywhere else. And they're not concerned about creating wealth for themselves. They are literally, it's like in their religion, concerned about creating wealth for their children's children. Okay, so every single decision that they make is not for them in this life, it is for their children's children. Okay? And you guys know it's like that stereotype of Jewish people are wealthy is real for a reason, and it is like culturally indoctrinated into them. Okay? So that's part of this. If you are so financially free, like you don't have a care, like I call it like, are you impenetrably wealthy? Meaning like, do you have enough money coming in if you stopped working that you are more than covered, okay? And so there's also something I coach where it's like getting people to $1 million in paper net worth, meaning like through assets, they get there and they don't feel wealthy. Do you guys know why? Because it's not liquid. It's not liquid, so it's like you need money coming in where you're not doing, so that could look like stock dividends, that could look like real estate income, business ownership, whatever, lenders, getting interest for loans. So you're in legacy when you don't even have a financial care in the world, and you are now thinking about what are you doing for your children's children, or what if you don't have kids, like whatever nieces, sure.
Your nieces.
Yeah, little shits.
Yes.
I would say. I love them.
Yes.
They're wonderful. Okay, so legacy, guys, I'm gonna be honest, most people are never gonna get here. Most people are probably never even gonna get to advanced. So that's part of what you need to know is like, where are you? Are you beginner, intermediate, advanced, or legacy? And start where you are. Because if you don't, you're gonna get so discombobulated. People, I think Akila and I were chatting before we did this presentation, how one of her clients got scammed into a trust that they didn't even need, just because the guy wanted to charge fees. And it's something cool that's on social media, So just be careful with that and just be where you are, okay? So legacy, you guys know what a family office is? So a private family office, guys, becomes when you are so wealthy, you have your own team of CPAs, attorneys that are working for you, okay? Some families like split them, they're called like fractional family offices, but it's pretty powerful. Trusts, being anonymous, right? So I've worked with like a lot of high net worth clients, and they're always buying stuff in trusts. Talk to the family office will wire the money. Okay, so it's like wealth is not loud. That's the other thing too. It's like wealth is not going to be real flashy for you. Like truly wealthy people intentionally try to hide their wealth to the general public because it's dangerous, right? They're targets. So being private is very important. Succession and estate planning. So that's the other thing. If you are at such a point of your business is so well run, do you have a succession plan? Like you're the key, they call it like, there's a policy called key man risk so that you can get, right? So if you are so critical to your business operation, should you pass away, that policy pays out the business, okay? The million in net worth, guys, that one is such a fucking bummer to me because people work so hard to get to $1 million net worth and I'm like, let me guess, you don't feel wealthy. And they're like, nope. And I'm like, okay, let's work on monthly cash flow from not working, right? And then teaching wealth to the next generation. And so you can be at pieces of this, right? Like a couple of you guys know I have 2 nieces and I have them, one of them just turned 17, the other one's 10. And I've been showing them how to invest in the stock market. We do and they can tell me what a dividend is, they can tell me what a drip plan is, they can tell me what the S&P 500 is, they can tell me we think in decades, not days. They can tell me when the market goes down, we buy, when the market goes up, we buy. Do we change the strategy? No. Do we listen to our emotions? No. Do we listen to the headlines? No. So it's like, they're like little yeah. But you can kind of, and blend, and this is what when I first started talking, guys, with the entrepreneur journey, you're gonna have high highs and low lows. So I have been up at advanced and got my ass kicked back down to beginner, and I've been a beginner thing and then bounced back to legacy. And so it's okay to kind of go, and learn. You're gonna be up and down on some of this stuff, okay? So take a note on that, and then we do our next slide. Okay, so this is the real issue. When people say I pay too much in taxes, I always like to kind of peel the onion back and be like, what are they actually saying? And in my experience, it's income problems, consistency problems, and system problems. Okay, so if you feel like you're paying too much in taxes, well, if you made more money, would that cure it for you? Would you feel better? Maybe, okay? Consistency problems, who's had a really big year and then a really bad year, and a really big year and a really bad, we call that the real estate roller coaster, the entrepreneur roller coaster, okay? It happens. And then systems, you don't have a systems or a plan, you don't have an Aquila, you don't have a team, okay? So this part, you've got to learn to reliably make money. That's number one. And so I can't emphasize that enough. When people come talking about keeping more money, I'm like, how much are you making? Because we've got to get that number up before some of this matters. And so, yeah, that's why I like to get people to 10 million in production, because at that point, then they're ready to do some of this. So we can go last slide. Okay, gifts. And then we're going to... Phones out, okay. We're gonna go to Q&A, but I wanna do my surprise and delight for you. So remember we talked about belief? So have you guys learned something? At least, has everybody learned at least one thing you can look up? Okay, cool. Are they? So you can ask me and Akila more questions in just a second here, but what I wanted to say about belief is people have believed in me long before I felt worthy of it. And I have had a very lucky string of mentors and clients and people that have helped me learn all of this. And you have to know that it's like when the student is willing, the teacher will appear, right? So you have to be open and not closed off to some of this stuff. And so something really cool happened, and we're going to be able to share it with you. So it is, do you guys know who Robert Kiyosaki is? Yes. Yeah. Do you guys know who David Goggins is? Yes. Yeah? Do you guys know who Russell Brunson is? Yes. Okay. Would you like to learn from all three of them? Yes. Okay. You know what your surprise is? Yes. So that Aspire conference that's coming here on Tuesday, the convention center, you guys all, when you scan this QR code, I'll give you the code, you'll get Emerald level tickets, which are $500 about, for free for being here tonight. Okay. So, did I make a room of believers? People will help you if you show up, okay? How do we get these free tickets, guys? Networking, knowing people, okay? So I will get you these. When we're done here, guys, you come up here, scan this. You're gonna use the code motivation, all capital, and then make sure that you click Apple Pay. It'll zero everything out, and you just click go. Okay? So.
Thank you, Mary.
Yay! Belief, guys, you gotta believe. All right, so if you want, I've got another free giveaway. That one's not quite as cool as the Aspire tickets and Learn, but that one, it's like it'll help you understand, are you beginner, intermediate, legacy. And then if you're any real estate agents that I don't know in here, well, I know, yeah. If you don't, we start $10 million agent training. So if money is the issue and you want to learn how to sell and make money, we start that Monday. And then Akila, you can grab her cell phones up there and link to her website. And then we're all yours for questions.